pleased to introduce Ms. Yussar. She is a Somali banker and entrepreneur who was the first female head of the Central Bank of Somalia in 2012. So without further ado, I'd like to welcome Yussar to the stage.
Well, thank you very much. Good afternoon, ladies and gentlemen. It's an honor and a privilege to be with you here today. And I'm particularly honored by the fact that I'm the only non-tech person so far. Half of what was going on was going over my head, so whenever I see young people with long hair and jeans, I know I'm in the wrong place. I'm going to talk about financial inclusion and how whether Bitcoin and blockchain technology will help deepen financial inclusion. And as you will see, most of my comments will be based on Africa because I have done a lot of work on financial inclusion in Africa. So I'm much more familiar with that, but I think most of that obviously is also relevant for other emerging markets countries. While global economic development and global financial integration have benefited a lot of companies, there are billions of people who continue to live in poverty. They are financially marginalized and have no access to bank accounts. They remain outside the economic mainstream. Some have money, but they don't trust the banks. And the banks themselves have not invested in the infrastructure to serve these people. They continue to remain unbanked, and I think it's important that they need to be included in the financial system. So what is financial inclusion? The development community has a definition for financial inclusion, and the central banks as well. And it refers to the number of families and individuals and small businesses who own a bank account, a financial account in a formal financial institution, who save in a financial institution, who have a loan from a financial institution, or who can obtain insurance from a formal institution. Now, your financial inclusion is a hot topic these days. Everybody's talking about it. And all governments in the developing world seem to want financial inclusion for their citizens. So what does it mean? Is it the ability for somebody to have a bank account? Does having a mobile money account qualify as a bank account, as having a bank, an account? Does having a remittance account where an individual receives his money every month from their loved ones overseas qualify as financial inclusion? By the same token, can we say that if that individual is no longer able to receive that money from their loved ones, it is financial exclusion? We cannot talk about financial inclusion, obviously, without talking about financial exclusion. Each year, billions of dollars are sent by the diaspora from around the world back to their loved ones at home. Yet this remittance business, usually that go through normally what's called hawalas, not just the usual MoneyGram and others that have been in the business, are under threat of being shut down as correspondent banks continue to de-risk to comply with regulatory requirements. So what is happening is basically regulations that are meant to address the financial crisis in the world and meant for large banks in the West are now catching all these small countries and are causing them a lot of problems, whether it is remittance flows or whether it is trade credit. correspondent banks, look at the country's profile and say that country has some kind of terrorism, we don't want to deal with it. This country is too small, therefore it's not even rated, and we don't want to deal with it. And this is really causing a lot of problems for emerging markets. In some countries like Somalia, Bangladesh, some North African countries, some Latin American countries, remittances represent a significant portion of the GDP. It is in some cases larger than foreign direct investment and foreign aid, and in some cases combined. Should these remittances cease, it will have a serious impact on the livelihoods of the most vulnerable who depend on these money flows. Remittances are also very expensive and can range in fees from 5% to 10%. And when you add in the cost of foreign currency, it is even more expensive. So it is clear that applications based on the blockchain technology and maybe cryptocurrencies that can reduce the cost of these money flows and make them more legitimate would reduce the cost of the hawala systems and remittances. It would be very, very useful. Just getting back to financial inclusion itself, there are individuals who earn an average of $4 a day, and they totally lack access to financial services. So what do you may ask, do such individuals need financial accounts for, or bank accounts? I would argue that they do need a bank account. And by that, I don't mean a bank account that sits dormant somewhere and never gets used, but a bank account that allows them to have access to other financial services. So a bank account basically may allow them to save money so that they can manage their uneven cash flows. An example of that is farmers, okay? They receive one lump sum when they harvest, and if you keep cash in your pocket, you know it flows out very fast. If you have the money in a bank account, it's most likely to stay there and you only withdraw what you need. Based on their account history and activity, they may also become eligible for microloans, okay? So in Africa, we're seeing that there are all kinds of ways that a person's spend pattern is being looked at to see what they can qualify for. So the traditional way of banking, where you needed a person to have a loan, and to have that loan they must have collateral, is really not as applicable to some of the emerging markets countries like those in Africa. So we have discovered other ways that we look at, the spend pattern of somebody, for example, based on their mobile activity, and they qualify for microloans based on that. So they can use that microfinance loan, as I said, to maybe manage, their business, and maybe take their small business to the next level. So it's very important for them to have that access to that. And also maybe they can get insurance so they can manage, and plan for life's unexpected events. So real financial inclusion is not just about having a bank account, but having the ability to qualify for more financial services. Now, that financial inclusion then means that a large segment of society that remains outside the mainstream economy can be counted. Okay? But it also enables governments to get a true picture of the money supply. There is a lot of money in Africa that stays under the mattress, or you dig a hole and you bury your money in there, and you step on it all day long, it's there. So that kind of money will now come into the banking mainstream and can be counted as the money supply for the country, so the central bank is able to plan their monetary policy much better. Now let me talk about the mobile money revolution in Africa and how that's impacting financial inclusion. As mobile telephones reach the remotest corners of the world, and in Africa, most people don't realize it, but the mobile telephone penetration, just the mobile handset, is over 80% already. So everybody seems to have access to a mobile phone. If they don't own it, they know somebody who has, in the family, has access to a mobile phone. So pretty much everybody can access one. And these mobile phones, as mobile phones have expanded across the continent, mobile money has used the same infrastructure to now get money to the remotest parts of the continent and of the world. No longer does a person have to travel long distances to reach the nearest bank branch, or no longer do you have to look for the nearest bus that is going, the next bus that is going to your village, so you can send money to your grandma on that bus. Now you can actually just send the money by mobile, and she will receive it wherever she is and cash it at the nearest agent. However, I would say that the digital technology to date has been used mainly to make the conventional analog financial system easier to access. So using a mobile device to trigger a funds transfer or apply for credit is still moving the needle around. Okay. It's moved it a big way, but it hasn't really digitized the economy. Now, this has been by itself, as I said, very helpful to the poor and rural populations, which before mobile telephones became almost universal, were basically unbanked. And the cost of banking them was prohibitive. M-Pesa in Kenya is the leading global example of this channel extension. Through M-Pesa now, not only you can send money from point to point, but you can actually get a loan on your mobile phone, you can get insurance on your mobile phone, and the list is going on and on. Very soon, they'll be able to do a lot more with that. However, most of the services still are limited to cash-in, cash-out transactions. Okay, so cash in money, cashing in, cashing out, and there's a lot more work to do. But just to give you an example of the difference that mobile money has made in Africa, in Nigeria, which is the most populous country, mobile money is less than 4% right now. And therefore, financial inclusion, as measured by the factors I gave earlier, is around 34% in Nigeria. And that's because Nigeria has a lot of bank branches, actually. In Kenya, with the M-Pesa, introduction of M-Pesa, financial inclusion is over 70% right now. So that's significant leapfrogging. Now, what I think, though, that the Bitcoin and other cryptocurrencies are trying to disrupt and potentially displace the analog financial system with a true digital alternative. I think this is both very exciting and probably very threatening to very powerful interest groups. So what does the Bitcoin revolution have to do with financial inclusion? Potentially a great deal. And the reason is, while the current mobile digital financial services have the unique advantages, as I explained, they also have unique challenges. These challenges include building an agent network. So it's not enough that you can just send money from point to point. There has to be somebody at the other end to cash that money. And if you don't have that agent to cash it, then that money doesn't mean anything. Sending money to somebody by mobile has no meaning. You have to have a merchant network to accept mobile money payments. Okay, so now you have the wallet in your mobile. What do you do with it? You either go somewhere and you cash it out and then you go and spend it. But if you had merchants actually accepting this mobile payment, then it will take that to the next level, because you no longer need cash to carry around. You know, you take it to the merchant, he accepts it, and so on. So the next one and so on. So that's another challenge that mobile money has, payments have. Availability of broadband mobile networks is another challenge, and how far they reach, the most remote areas of the country. Availability of smart digital devices, efficient electric grids, and so on. But even when you are moving money through mobile banking, cash still has to be moved around. As agents and merchants who cash out for somebody have to have the cash replenished. So this is, one of the dilemmas that we are facing now. Okay, you can have mobile money, you build an agent network, you've done all this, and the money is now going there, but the agents want their money back when they cash that, mobile payment. And so do the merchants. Cash is expensive to print, and it's expensive to move around. And it's also prone to counterfeiting and to theft. So for example, in the Ivory Coast, the taxi drivers now accept mobile money. And when I asked them why they accept mobile money, they said, because we don't have to get, we cannot be robbed anymore. Because, somebody gets in the taxi, holds a gun, takes the cash from him, now he doesn't have to deal with that, So they love it, okay? Buses, minibuses in Kenya, all the all the buses now accept Bitcoin currencies and stuff like that. So let me touch on. So cash is a problem, as I mentioned, because cash has to be moved around, and if you have to move now, if you now have to move cash to very remote locations, you have the same problems that the mobile phone solved, which is roads that don't work well. You still have to find somebody who takes that cash by truck or by whatever car or something, and then bring that cash back. So you are now in that again. You have that limitation that is causing financial inclusion not to be extended to very, very remote areas of the continent. So let me touch on M-Pesa and other digital currencies and how they are disrupting the banking system in Africa. So the banking system in Africa at the beginning, when the mobile money was introduced, they said, dealing with poor people, who cares, That's not our target market anyway. So they didn't care, But what they realized was that these mobile money companies were getting so much cash. They were getting so much cash. I was in Ethiopia a month ago, and the Ethiopian banks were telling me that they are now discovering that there is more money in rural areas than they ever thought was available. So the National Bank of Ethiopia was saying, as they open more branches in rural areas, they're finding that the liquidity is just increasing so much. So banks are now thinking, wait a minute, mobile money, well, these mobile phone companies are taking all our money. That money should normally be coming to the banks. So now they're scrambling to figure out what to do, because not only the mobile companies can transfer money, so they lost that transfer business. Now they're extending credit to these individuals. They are providing them insurance. They are providing them savings accounts. So banks are thinking, what are we in the business for? So now they're really trying to figure out what to do. What should we do? How do we attack this? How do we get this? So in some countries, like in Nigeria, the banking industry lobbied so hard when the mobile money licenses were being issued to make sure that they only go to banks. So the Nigerian government gave them the license. They said, okay, the license will only go to banks. But guess what? Nothing is moving. Nothing is moving. Because banks don't, number one, they don't have enough branches. Number two, it's very expensive for them to build those bricks and mortars all over the country. And number three, they already have a captive customer base, so they really are not incentivized to go out and deal with poor people or they always regarded as not their customer base anyway, so they're sitting on the licenses. And that's why mobile money penetration in Nigeria is 4% as opposed to Kenya, which is huge. So, this is where banks now have to start thinking about what business they want to be in. Now, going back to cash, just imagine a cashless society. And I'm going to describe one. Imagine a country where most people have a digital wallet, where a restaurant, a shop, anyone selling any product or services, a woman selling tomatoes on the street, and even beggars have a mobile phone ID and accept payments in mobile phones. In such a society, there is less need to carry cash around. Such a country actually exists today, and you will not believe that it's actually Somalia. Somaliland, to be more precise. It is totally digital, and it's not totally digital, but it's very close to it. In fact, beggars found out that nobody was carrying cash, so they got their own mobile phone and their own mobile number. And now when they ask you for money and you say, I have no cash, they say, send it to my mobile phone, and they have a mobile number. So you say, what's your mobile number? Oh, give them $1. So the money, of course, in Somalia, as in everywhere else, is loaded on a person's mobile. And while payments for purchases are still used in text messaging, using Bitcoin and other cryptocurrencies may be the next step. Okay. Now, again, here is another provocative thought. The Somali shilling has no value. It is not traded outside the country. So should countries whose currencies have no value outside their borders happily adopt cryptocurrencies like Bitcoin, which suddenly gives their citizens the ability to conduct trade around the world without having to deal with currency conversions and national capital reserves. An example is Zimbabwe. Zimbabwe just recently completely did away with their currency because it was getting out of control, okay? And they adopted the US dollar. Now, even in Somalia, by the way, the currency of choice is the US dollar. It's really a dollarized economy. Now, Zimbabwe is going to be another dollarized economy. So should the dollar be the currency of choice for the world? And if that happens, what is the US going to do? Will it continue to stand behind its currency? Or will it just be another currency that, it's just going to be used, something called a dollar is going to be used, but has no monetary, no paper, no coins attached to it. Okay. So does this type of cashless economy and having one currency in the world actually empower developing nations to do more trade, to do more, financial dealings with the rest of the world? Because if you are now in a small country and you need to buy something, you need dollars. And to get those dollars, your country has to be able to convert it. And your country must have some national reserves, and so on and so on. So and none of that was needed, would it actually improve global trade? We're already in Africa beginning to see financial inclusion going beyond borders, okay? So on a recent 4-country trip that I made with the African Development Bank and MasterCard Corporation, we went and talked to 5 countries, stakeholders in 5 countries, Kenya, Tanzania, Uganda, Ethiopia, and also met with stakeholders in the Ivory Coast regarding how to deepen financial inclusion. And we discovered, when talking to people, that there was a real desire, okay, to have the ability to send money digitally across regional borders. So everybody said to us in East Africa, I want to use my mobile money to send money to pay for some goods or services that I got from Kenya and I'm in Uganda, and I don't see why I cannot do that. I can do it here. I don't see why I cannot do the same thing. Now, they actually are now able to do that a little bit. So MTN and other similar mobile companies are offering that ability, but their exchange, there's still an exchange, foreign exchange involved in the process. So they will tell you, okay, you want to send 10 Kenyan shillings to convert to somebody in Uganda, it's going to cost you this much to convert from Uganda shilling to Kenyan shilling. So now central banks in the region are saying, you know what, maybe we should be talking about some regional currency. Okay. Maybe we should be talking, and then the other things that I was hearing from the central bank is, can we not have a cashless transaction? Because cash costs us a lot of money. And if we don't need this cash, then that's the money that we can use for some other development purposes. So should we not be talking about a cashless economy and how we can get there? So this is something to think about, as digital money comes about, and in some way, shape, or form, it always goes to the next level, and then the next level, and the next level. Okay. So, 25 years from now, will the world end up with a few regional currencies, but with no physical movement of cash, or cryptocurrencies with no physical movement of cash? Will new technology change how cash and how much cash is used in the future? And will this have a positive impact on financial inclusion? I think it will. Having said all of that, it is very difficult standing here today, and for all of us sitting here, to imagine a situation where there's no regulatory oversight, okay, of digital financial services, of Bitcoin, of other cryptocurrencies. The greatest value of Bitcoin is as a universal, hyper-efficient payment system rather than a store of value. And regulators need to understand what it means. And I'm not particularly advocating for Bitcoin, I'm just using it as an example. Will governments give up control of a centralized ledger system? Regulators, from everyone I've talked to so far, whether they are in the US or in Africa or elsewhere, are walking a fine line between encouraging financial innovation and managing the risks involved in these new technologies. But they have to keep abreast of the ever-evolving digital payment technology and figure out how they can proactively manage this and play a role. So some issues for regulatory consideration include, obviously, protection of customer assets, taxation of digital money. Now we all start using new digital money, should this be taxed? Of course, the IRS is going to say yes. And okay. Security, data privacy, anti-money laundering, counterterrorism financing, these regulations are not going away, and they need to be taken into consideration, because as we saw with Bitcoin already, there will be people who will use it for other things, criminal activities. Who can access what information, and the rules of the game for all stakeholders have to be figured out by regulators, but there will be some regulation, I'm sure. As a former central banker, I have to say that. So, will there be losers and gainers in this new 21st financial inclusion, financial services technology? It is important that developing countries don't become the losers, as blockchain technology, the Internet of Things, and other technologies that come up revolutionize how business is conducted in the world. These technologies will lead to new financial applications that will lower the cost of financial services and deepen financial inclusion, and it's important that developing countries participate in this. However, there are some challenges for developing countries, and of course those include broadband internet, data centers, power supply, as I talked about, investment in new startups, technology startups, very difficult in Africa, as I have heard from all the startup companies. Developing countries, if they do not take care of this and do not get help with this, may not move in this fast-moving technological revolution. This then risks running two parallel economies rather than a fully integrated global economy where trade flows seamlessly across borders. Despite these challenges, I am hopeful that Africa will continue to lead the way in digital mobile money and in the use of new technologies. Necessity is the mother of invention, as they say. And I hope the developed world will follow suit and accept the opportunities presented by these new digital payment technologies rather than resisting it and staying with this archaic world of banking as it is today in the West. The banks themselves should realize that the danger that they are in if they are not proactive in this field. So I have talked too much, and I will conclude by saying that I do believe that financial inclusion is important, not because we feel sorry for the poor, but because it's good business. Some thought that mobile phones were not going to be used by the poor in Africa when they were first introduced. Mobile penetration in Africa has proven this theory wrong. Some thought that mobile money will never amount to anything in Africa. M-Pesa has proven it to be a disruptive technology. So imagine a world where a single currency, digital money, global money, leads to a seamless flow of global trade. Is that not real financial inclusion? Thank you very much. So I'll be happy to take some questions. Yes.
I'm very grateful you're standing up there and saying that financial inclusion improves the lot of the poor, and remittances being chopped off results in financial exclusion. Now we are watching what is happening with these cutting off of remittances experiments that various countries are running. How is it transpiring on the ground? When the remittances are chopped off, what do the people do? Do they survive, or do they turn to crime? Does the situation become worse? Are we achieving the objectives we set out for ourselves, or are we achieving precisely the reverse?
I will to answer it, give you a short answer. I think we are achieving the opposite of what we are trying to achieve. Okay, so when you cut off money transfers, when you cut off remittances, what happens? Okay, doesn't mean that first of all remittances stops. It means it goes underground. So you go from being transparent to being less transparent. Go from a system of having to know who sent the money to not knowing who sent the money and where it was sent to. So you're back, you're really worse off than you were before. The second thing that happens is when you have mass cutoffs like that happened in Somalia, the United States cut off, or at least the banks that were dealing with the hawalas cut off all the remittance to Somalia. Now what is happening is cash, number one, cash is taken in suitcases, which is not a sustainable situation. And number two, a lot of people are not receiving their money. So you have women with children saying, what did I ever do to the United States? I am not a criminal, I am not, a terrorist. So what did I do that I have to be penalized for this because I needed this money to send my child to school, and my child is not able to go to school now. And I have heard a lot of this happening when, not only when the US cut off remittances to Somalia, when that was stopped, the US did not particularly, government did not particularly cut it off, but the banks stopped it. And Kenyan government proactively actually cut off all remittance to Somalia. So who was receiving that money in Kenya? It was the people who are in camps who were receiving that money. Somalis who are in camps were receiving money from their families overseas who were trying to keep them going while they were still in these camps. So they're not receiving that money now. So the Kenyan situation is politically based. The Australian, which also cut off remittances to Somalia, and the US one is not so much political as it is based on these correspondent banking rules and regulations that are very punitive right now for anybody who is caught having their network used by some kind of a, unsavory transaction. So before we come up with these regulations, people have to think about the impact it has on lives, real people, real lives on the ground. It's not that one life is better than the other. Everybody's life is important in the world.
Thank you, Madam Abar, for addressing us today. It's been incredibly refreshing to have a non-technical presentation on such a relevant issue. Before I ask my question, I would like to put forward a slight, ever so slight ray of hope concerning the de-risking, bank de-risking, wholesale de-risking. At long last, there is recognition that using certain kinds of regulation, for example, anti-money laundering regulations and counter-financing terrorism regulation, as a reason, as the rationale behind de-risking. There is recognition from the Financial Action Task Force now that this is actually the wrong approach, that it is in fact being wrongly used. Anti-money laundering is being wrongly used as the excuse, because in fact it does not follow the concept of a risk-based approach. So there's a ray of hope that the scandalous cutting off of Somalia and other countries as a result of this de-risking may start to be relaxed.
I hope so.
My question for you is to do with the blockchain more widely, and whether you feel that there's a role for blockchain technologies being used, for example, in title registries. In title registries, land title registries.
I think that's...
So as to provide the basis for financial charges and security upon which loans can be given.
Yes, I think it is definitely one of the applications that can be used, and I saw that need in Africa, because it's very difficult to verify titles. So having that, number one, just being able to verify titles is very good. And all the governments, not all the governments, some of the governments I have talked to are actually interested in doing that. Secondly, as you truly mentioned, that once you have that title cleared and stored in a place where people can access it, then you can use that easily as a collateral for a loan. So it's very, very important. And I've heard this from the central banks in the countries that I visited, that they are actually very interested in doing that. And blockchain technology will be fantastic to do that. Because you sometimes have the issue of multiple people holding a title. And this is one of the biggest disputes we see in Africa. You buy a piece of land and then somebody else comes forward and says, no, that belongs to me actually. I bought them before they bought them. So it was mine. And then another person shows up, and by the time you have 7 people, you have lost your money. Okay, so having blockchain technology with the ability to verify and to have that integrity would be very, very useful. Thank you.
Thank you again so much. In our little safe enclaves in Silicon Valley and London and New York and elsewhere, often hear about these technologies in the developing world and what's happening over there and them and they, and it's incredibly powerful and humbling to hear the real life stories on the ground. We're going to start into our next panel, which is addressing the same issues of the challenges of achieving this kind of global infrastructure for the other 99%. But before we begin, I wanted to just introduce remotely Ms. Amina Ahmadi. She is a woman in the Afghan Ministry of Finance. And the reason why she can't be here today is actually a very, I think, a very telling story. We've been working with Ms. Amiri to get her visa application approved to get from Afghanistan to here. If you read her bio in the program, you can see exactly how much she has accomplished in her, impressively in a short amount of time. In Afghanistan, as a woman, you can't leave the country unless you're accompanied by a male relative. Not only that, you have to jump through a number of steps. So we applied for her visa, we paid for priority processing. In order to even take her biometric appointment, this woman who is incredibly accomplished in Afghanistan against all odds has to travel by a dangerous road through Taliban territory into Pakistan just to submit her biometric information. Now, she went ahead and did that in order to be here to address this audience. When she arrived at the processing center in Pakistan, she was extorted for more money. She was demanded to pay cash in order to be placed properly in the priority queue. Now, once they took her documents and put her in the standard rather than priority processing queue, we then entered into a 2-3 week Kafkaesque nightmare where you must pay hundreds of pounds to be able to get to a live call center, which then tells you they can only see what's on the system. So we called every single day. We paid the fee, we called every single day and escalated it to the processing center in Abu Dhabi every single day. And in fact, about a week later of these calls, we got a notification that her case had actually been escalated to special processing because I think the authorities could not conceive of how anyone could be spending a salary's worth of funds every day to try to get this woman out of Afghanistan. So ultimately, we've still been in this Kafkaesque nightmare with the bureaucracy, and this really actually, I think, illuminates how at odds some of our real policy goals are to each other. So in our effort to stem the specter of money laundering and terrorist financing, what we're actually doing is penalizing women and children and people who are on the ground in communities that are a part of our global community, that should be a part of our global financial network. And what's really shocking, and I apologize to those who are here in the UK, and I'm sure the United States can be accused of much worse. What's shocking is that this is a UK processing center. She's going through the regulated standard process that the UK government sets for people to be able to obtain a visitor visa in order to get to London. So, as we talk about these technologies and how they may change some of these inequities, how they may create systemic change, I think that beyond just the technology, we should think about our human processes. Is our effort for control, for AML, for visibility, really achieving other goals of financial inclusion, of creating more equality, more participatory economies, and the like. So we're going to go ahead and have our next panel, but I did want to tell Ms. Amari's story, and we hope that we're going to be able to fly her out for the next workshop. But she is here in spirit, and we have fought very, very hard for her to be here, and hopefully we can now kind of begin to grasp some of the challenges that these human beings face on the ground everywhere in the world today. So